Welcome to the Foundation for the Study of Cycles and watching Cycles TV. My name is Lars von Thienen, member of the board of the Foundation, and as you know, we try to meet once a week on Monday, same place, same time here on the channel to do some live analysis on cycles. So what we're doing here is we use the technology, digital signal processing, to see what the current market cycles are up to. So we are using current market data, not historical data, and I will walk you through what the current cycles in different markets look like. That's the purpose of this weekly session. By the way, the main purpose is also to have the education on how cycle analysis works and what you can do if you're a member of the Foundation using the tools. If you're just interested in where the market cycles are, you are invited just to watch to get an idea of what the active market cycles are. That's just the intro. What we will do today is, as we are live, so this is again a live session, I'm here again, and excuse the last weeks I was on travel. So you have seen pre-recorded session for the last 2 weeks with some basic usage of the Cycles application. Today I will again review with you the main global US markets. So we will have a look at the S&P and to see what the current market cycles are on the S&P, and then I will switch over to adding financial stress indices, which is always important to analyze cycles in the global main markets. Then have a look at gold cycles, commodities, and finally also a quick view on what is happening in the crypto cycles area so that you get an update today. US main markets in addition with sentiment stress, then gold cycles and crypto cycles. That's the plan for today, to have a look at these markets with current cycles. And for sure at the end or even in between, I will monitor your chat section and the questions. And at the end, I will try to give you the answers you might looking for. So use the opportunity to ask me everything you want today, and I will see if I can help you out. That's it for today. That's the plan. Let's stick together for the next 20 to 40 minutes. Depends a little bit on your questions. And let's kick it off with the view of the main markets. So let's start with the overall perspective first. And by talking about or meaning overall perspective, I mean the longer term time frame. Therefore, I will use the weekly time frame. And for today, I will have a look at the financial stress index weekly time frame to get an idea of the frame. Before we go into daily or even shorter term cycles, we need to be aware of where we are in the larger picture. If you have followed previous analysis from October end of last year, you are aware of that the longer term cycles coming from the weekly time frame have topped at the end of last year in different views on the global main market. So please use the library to check the videos on that. So I will not repeat everything, but therefore I want to update now the financial stress index. We will therefore switch over to our cycle analysis application. We switch to the sentiment section. And in the sentiment section, we have the so-called financial stress index. This is provided by the Reserve Bank of St. Louis. They provide this data set for free. So it's the FRED database if you are interested, and they create this financial stress index out of about 16 different measurements on the main markets, and the result is an index measuring the stress in the financial markets, which we can use to put our cycles analysis on top of that. There's one thing if you're working with this data set, because they have changed their procedure or their algorithm to a new frame. So therefore, if you open this data set, it will end in January this year. You need to switch over to their new financial stress index, which is number 3 or version 3 of this index. So therefore, please change the ID, what you're seeing here, the 2, need to be replaced with a 3 to get the latest version of their version 3 in the data set. And then if you haven't already, please do so. This is the ID which you can obtain from the Fred database. And now we have also the latest updated data ending Friday last week, or even a week before. I think the latest update from end of last week will rush in during the week. So we have 1 week lag, but that's not important for this financial stress index here. So that's how the financial stress index looks like. Weekly time frame. So what we're doing now, basic procedure. Let's first have a look at the cycle spectrum chart for this data set, which looks like this. We are looking for peaks in the spectrum. Yeah, that's our main purpose, what we're trying to do here. And the key peak, which clearly stands out, can be seen here with a length of 198 weeks cycle. So that's the most dominant cycle, which is clearly at the current point in time standing out. So this might change over time. So therefore you need to recheck the spectrum analysis from week to week to see if the dominant cycles have changed. As this is clearly standing out, I would start with this main cycle, because the next one would be here, this one with a length of 151. So, and then I think there's a lot of shorter term cycles which are not quite clear which is dominant. So this is the most dominant. Then you could maybe add these two here on the sidelines, but this is the most prominent one here. The triangle gives us additional information. So it's green, we have a good Bartle score. The size of the triangle is an indication about the strength of the cycle. So everything is fine. You see here's the very small triangle. So the strength of this larger cycle is small, even though it's longer. So this strength is maybe not the best strength, but a very good strength, a good Bartle score, clearly standing out in the spectrum. So that's the cycle to pick. So therefore we can then also switch to the list of cycles. The list of cycles is just a different view from the spectrum. It's just listing the peaks, which you will also see in the spectrum, just in a table view. And there we will find here at the bottom the cycle with a length of 198. As said, here on the right-hand side, good Bartle score, strength is okay, and that's the amplitude. So if you have a look at the shorter-term cycles, the shorter-term cycles are listed above these longer-term cycles, but very short length, yeah, in comparison. So the longest cycle is about 50, and then we get a big jump to 198 weeks. So if we want to deal with the most important longest cycle, which I would recommend to start with, it's clearly seen, or it's obvious. It has a length of 198 weeks to start off. So therefore, let's select this cycle, plot it as an overlay. Let's first have a quick cross-check about historical tops and bottoms of this cycle compared to the original data set. So this is what I recommend to cross-check, just a visual confirmation that you just quickly check the tops of the cycle in comparison to the tops of the raw data. Just to repeat, as I do every time, the cycles overlay we are seeing here is used for timing information. So the amplitude of the cycle gives us no indication about the absolute up or down move of the raw data. We just use this for timing. So therefore it's important to cross-check the timing information. So here at this point it's obvious. Then here we have first low, second low, but this corresponds here to the cycle low. Here we have the top. Here we have this one here. So if you connect it just via a zigzag move, you see that we can clearly connect the tops and bottoms of the raw data, and we see it very nicely aligns with past behavior of this sentiment cycle. And that's important, as I wanted to set the next analysis into context. Now we clearly see what, from a sentiment point of view, is this dominant cycle predicting. And if we zoom in a little bit more closer to this data set, you see that this cycle bottomed, or the bottom started in October. This was, by the way, the first time I warned you that the main markets are ready for a downturn. Which obviously happened then just here in December. And you see what's happening here. So we are still in this bottoming period. So if you call this the bottoming window of the cycle, you don't know on a daily basis where the exact low, the exact top, in the markets will happen. So I think we at this time here, we had the main top in the markets already, by end of last year in January. Then markets moved down, and then by this drop here in the sentiment index, we had a short correction. But as you see now, the longer picture of the sentiment points up, so that the markets are more or less doomed, at least from a timing perspective, here into the year of 2023 we are talking here, right? So this is now maybe end of next year. This cycle speaks a clear message. That's why I think it's important to set now all shorter term analysis in regards to cycles into context of this longer cycle. That's pure sentiment cycle, but you will observe the same long-term situation in the S&P and the main markets I've shown you in last analysis. So therefore I will not go over each individual data set, but the long-term perspective has not changed for the main markets. That's important. I wanted to raise this up front, or you see here from the main long-term cycle has not changed since October, November last year. And there's a lot of room to move forward. So the financial stress is expected to rise until 2023, which will correspond to markets moving down. So no change in the long-term cycle perspective. So that's then now the point we can move over to the daily time frame to see what the shorter term cycles might give us a clue. So let's use the S&P 500, so the US main markets here on a daily time frame now. So that's what I mentioned. We saw the top here in November, December last year. That's where the first main bottom also was expected of the sentiment cycle. Now we saw the strong down move. We then saw another falling sentiment index, which I think was exactly this time here. Now it looks like the market has reversed again. So we are now correcting again. So this is also important. And let's move back, for example, into the period to get a little bit of historical step-by-step analysis into, I will get back to the current analysis somewhere here in, I don't know, somewhere end of February, somewhere here. Sorry, that's the wrong point. I wanted the end point to start at somewhere here, end of February. Here, let's update the analysis. And let's have, so the light blue. So that's the way, if you want to have a step-by-step view, also how successful have the cycles been in the past, you can always set the end point of your analysis to somewhere in the past. So the tools allows you also to step back in time and see what the cycles prediction have been at this time. So the light blue is the price action, but this price action is not known, is not visible to the cycles detection, and only the dark blue data is used for the cycle analysis. So therefore, at this point in time, and that's important, we have been aware by end of last year that we expect the markets to reverse daily, weekly. Please look back what we did here on the channel. But then this was for sure the time, will the markets go down further? Would we expect correction, whatever? The way what we do then on the daily time frame is to look at the cycles at this point in time somewhere in the past. So we still have been in a falling market here, so there's no indication of a possible correction or whatever here at this point in time. So the cycles at this point in time, same procedure as always, so no configuration change, nothing. Basic standard analysis, the cycle which stands out here is 161. And I would then recommend, if it's not so clear which one to pick, I mean, we have 2 or 3 other peaks which look a little bit similar here, but not more. And I would never recommend use never more than 3, maybe up to 5 if you want, and if you are confident which what you're doing here and why you use these cycles. If you're not sure, only go up to the most important 3 cycles here. So which is obviously 161, 118, 81, 51. So we could, I would skip this one here. So here's a green. So the reason why I'm picking this one here, I think this is more or less the strongest. Yeah, it's the, let's have a closer view here or let me guide you a little bit to the reason. So I think the 51, which is the green here in the center, I think this is the largest triangle. So I think therefore the highest strength. And then, I mean, there we have now two conflicting cycles here, the left blue and on the right hand side, the green one. So I say conflicting because the blue one has a higher strength and the green one has a lower strength but a better battle score. So you could exchange these two. And then for sure this one here, as we have the highest amplitude, good strength and good battle score. So these four could be used, but I would only choose a combination out of 3 of them. So let's start with this one here, 51. By the way, before I'm doing this here, you also see the color coding of the phase of each individual cycle here in the list of our cycles. I often receive the question, what is the color information here? The color information you see here behind the length information is not the battle score. That's the difference between this one here. So here you see each peak is assigned with the color red, green, blue, which is related to the battle score as seen here on the right hand scale. The coloring here in the table behind the length number is the current phase of this cycle. So the status of the phase, and a green phase means we are in the upswing of this cycle, and a red background means the cycle is in a downturn period. So we get a quick view where each individual cycle of the given length is currently. And even though if we won't pick a dedicated cycle, you see that we have a screaming green screen of the current situation of cycles. So even if you are not aware which cycles to pick, this is a very interesting point in time because all cycles would indicate we are, from a cyclic perspective, ready for a reversal to the upside because all cycles give you an upward projection. So I mean, you will not often see this situation. So setting into context, we are still in a valid longer term downtrend, but now the daily cycles give us an indication end of February, beginning of March, we are poised for an upswing. And then, I mean, this is not the daily timing. You need then to dive in. I think we had the 81, we had the 51, and what did I say? The 161 cycle have been the 3 most dominant I've showed you in the spectrum just a minute ago. So that was, if you just pick the prominent 3 cycles, this has been the indication end of February. Yeah, so which projected a correction into, you see the timing here at the bottom of the chart, until to early April. And if I move over if I hover with the cursor over these dominant cycles projection, you see as the color indication behind the length on the right hand side also changes. So you see that if I now step forward in time, so I just need to put the mouse more to the right, you see how slightly the color indication of the different cycles changes. And you see now that, yeah, the green period ends very quickly. Yeah, you see the shorter term cycles are then all rolling over again to the red status here. So it's a very rare situation where we had this interesting point that all cycles at the point of the analysis have been green, but only for a short period in time. And latest here until this point, you see that even the more important cycles switch over to red. That's just let's keep it a cluster looking for phase synchronization here. But that's end of February until of April. We already had the information from the cycles standard procedure here. So what I'm showing you is the daily routine you should do not only on Monday, you should do on your own. Every day check these cycles, because then you would have seen this situation end of February. I think we anyhow did it here, and yeah, we can just insert now what really happened in the markets. So it was a clear information that this period was a short time where we could expect the correction. But again, we are still in the longer downtrend here. So we are now, and now let's look into the current situation. I will update this analysis in a second, because just from the projection we did end of February, and that's also an additional recommendation, you should never look at this static projection. Here, the projection of the 3 cycles, which I've used, have been done end of February. And we should not trust the static projection forever into the future. Maximum to the next 2 turning points, which your prediction did, which is here until early April. So this turn was in. So the next expected turning point might be May, but we should update it, and we should not go much further into the future here, because you should not, cycles are not static. At least the shorter term cycles in the context of the longer term cycles will change. So therefore, let's update the data to the current point in time. So I've just updated it with a click. So everything is now dark blue, which means that our routine has taken the current data into the context. There are only these two cycles are still in play, 51, 82. So let's have a look at the spectrum. What has changed here? So the one with a length of 160 something changed into a length of 1, or morphed based on the principle of variation of cycles into a length of 166 days. So we need to add this. It's here already in the list. We need to add this into this list. And this is what we see now. Yeah, from the current most 3 daily cycles here. Yeah, we can also use the 122, but there's, okay, how to read it. You might now ask, okay, Lars, how should we read this? I think the way to look at this is now. So from now, or at least beginning of May. So within the next 2 weeks are still pointing down from a longer term perspective and from the daily cycles. And then somewhere early May, I think here it's the 9th May into summer, July, it's not clear where, and this is where you can then switch here. So the earliest top would be then June. If you take this out, maybe until July. So that's where you would change. But the key reading here is somewhere here, at least projected from now, we could see, either maybe another upward correction, but I would not expect too much upside potential as we're in the context of this longer term financial stress downward projection. Or what is also possible, more or less, we could see now a sideways move until this period, which would mean that from the data point of view, it might just go something like this, or some heavy swings as the volatility is very high. But latest, and that's where we need to be very careful, latest midsummer, I would expect that, that's what the cycles already tell us, that then the daily cycles until at least into October, maybe end of the year, we need to recheck, are in a downward swing again. So maybe the next 2 months are more or less heavy volatile sideways moves, as the daily cycle points in the opposite direction as the long-term downtrend cycle. So we don't know which cycle is stronger. So if the weekly cycle is overruling the daily, which hasn't here in this period, so it moved into a short correction, but a very short one, not easy to trade, not to get the right point. Could happen now again, as I need to clear this up here from this point. So we had the correction here, and this is also important. From a daily point of view, this was just a sideways move, but as we have still the weekly downswing, if you just see a sideways in the daily with an ongoing down cycle in the long-term perspective, you see this resulted in a very strong up move. So only this strong up move here in the cycles was able to generate the rebounds. Maybe now we might see beginning of May another short rebounds in the markets, but it will be limited. And then a very critical phase will be late summer until end of the year, where daily and weekly are in alignment. That's the view on the global US markets if you combine the weekly and daily cycles. I hope this helps you a little bit to get the context. And as always, use the shown cycle length if you are then move over or switch over to your technical analysis. You can use the length information to fine-tune your technical indicators, as I explained very often. So, very long analysis of the global main markets, but I think that's very important during these times to keep a clear view in these high volatile markets, what the cycles tell you. Let's add some other asset classes which I want to show in gold, which is also important to have a look at these days, these times. We saw this top here in March, and it's interesting to get a view what the cycles at this point now tell us. Same procedures always. Let's move to the spectrum. I think it's a clear message here which cycle to pick first for any additional analysis. Length of 220. So let's add this into the mix here, which is this cycle. I think just the last 3 swings here, quite good. I mean, I don't do a long-term analysis. You should always have your long-term analysis in mind. So that's more or less just connecting the timing points here from this cycle, which with the markets, allowing for sure some deviation to the left and right. But, and this is what I want to show here, until October now, we have an interesting window. Well, let's clear this up a little bit. So we are in this window here, expecting a major topping cycle for gold here, which until October, that's the point we are interested in. So the period from now until October from a daily cycles perspective looks like negative for gold. What I would recommend, do the same on silver, do the same on the weekly time frame as I showed you in the global US markets, and then you get a overall picture of that. But it's short update on gold commodities or that in general. And finally, let's also have a look at the crypto situation there in Bitcoin. For sure, it's really nobody knows since January we are in a range bound. I mean, where we really don't know what's happening from the long-term perspective. So let's start the standard procedure here. As always, cycles projection here. It's an interesting spectrum because, to be honest, there's only one to pick. However, that nowhere shows up. If you know the historic evolution of this cycle, you know that I'm always or often talking about a nominal cycle of 200 days in Bitcoin. If you have analyzed every important peak in Bitcoin, it was showing up in combination with a dominant cycle of 200 days normal cycle, so 180 to 220, which always in advance helped us to spot these moves. And the cycle is still there. However, the spectrum flattens out. And in the historical views, the cycle was a more clear peak in the spectrum. So what I say, we still see a clear peak here. So there is no second cycle seen here in the spectrum with this amplitude. So there's still just this one cycle to look at with a length of 228 days, which is this nominal cycle of 200 here. But the spectrum is flattening out. Yeah, you see this long range here where we don't have this clear, sharp peak you would like to see. Normally, you're looking for a clear, very short peak in the spectrum, which gives you more clear indication that this is a cycle to follow. So now, as the spectrum more and more, or if I want to show it to you, so a very good peak is just a short spike in the spectrum. So now instead of a spike, we see this flat peak, yeah, which is, I mean, from a data perspective, you can see the top here at this point in time, yeah, where the you don't see my cursor, where the cycle is topping here. at this point in time. So from a mathematical point of view, there is a clear peak at 228. And this is what you need to learn, how to read a spectrum. And therefore you won't see it in the table view. This is a very flat peak here. So maybe the real peak is here or here or here, but this will make a big difference in predicting the next turning points. So therefore, I would say, or you can say the trust score just using this one cycle gets lower and lower. So we should never follow, even though we just have one clear peak on the spectrum, we can't really be sure if the length is more 100 or 205 or even 250. So if you just look at this small range here, which is very close, it has a range starting with 205 up to 250 in length here. And this is now very important for a projection. Where's the top here? What you can do, I will not go into all details here, but this is what you need to take into account once you see this kind of spectrum. I will get to Bitcoin in a second, but I think it's an important spectrum to talk about if you see this in other data sets. You can now go into the configuration, and that's exactly the situation where this is designed for, where you can change how the scanner behaves. Normally it's just enough to use the standard amplitude spectrum, which you can configure then also in the settings. But if you have more this complex view, you can switch to an average power spectrum, which tries to make the signal processing even more complicated without going into the details, but maybe helps to avoid this. And you see what happened here. It's not as flat as before, to say it this way. I try to keep it simple here in the framing, not to get into the details here. So the shorter ones have even been more irrelevant. So there is no other shorter term cycle. But now if we hover here, we see if we use this advanced spectrum analysis, we get it in 233 and it's not as flat as the other one. So if you see how here it's more in this range here, or in this range here, where it's a clearer peak. So the other one was 228. This one suggests more even longer period, 230 something. And then you can more or less dive into it. The next step would be you add more historical data points and to see how this changes here. So that's the procedure you need to take into account if you are now acting as an analyst. You need to add more data and see. So let's put the start point of our analysis. Let's add more 2 or 3 years. Update the data until this point here. So now we have more bars taking into account, and see now how the spectrum changes. So it's now 256. So you see how the spectrum changes just by adding some data using a different method. And that's the way we get more and more inconsistent results, which makes it very hard now. Or you see that it's, the trust score, if you do this analysis, is not as good as it was in the historical analysis. But even though, let's see what this cycle suggests here. So using more the advanced analysis, so activating the average power spectrum, which adds more, or in short, it is not only doing one spectrum analysis, it's doing different spectrum analysis, just randomly changing the start and the end point. So making your analysis independent from selecting the start and the end, because you decide the start and the end point, and this could influence the output. The average power spectrum, that's the reason why it's called average, is using up to 10 or 100 versions of the spectrum by randomly changing the start and the end point, just in short terms, and then getting the average of the analysis out. This is what it's done here, and that this results in clearer peaks in the spectrum. This is the longer term one, and then I would suggest analyzing both cycles which show up here. So this one still seems to be that this sideways move we have seen here since, I mean, I showed you in the analysis we did here in general that it looks like the 200-day cycle has bottomed. Yeah, this is my statement I did already in January. So I stick to my previous analysis, which was more or less the first time we entered the down phase of the cycle here. You know that the down top could be also more shifted to the left or to the right. You never know exactly, always know after the fact. But this is the window, for the bottoming. And we are still in the process. If you see what happens in the markets, we are still in this sideways period, since this point in time. So for sure we have volatile markets here, but this would suggest this 200-day cycle seems to have shifted in a 250-day cycle. So the length has extended, which means that the bottoming period has extended. And this is what happens with cycles. They are not static. We have the principle of variation. So the 200 cycle has now been, stretched to say, now 250 something days, which looks like we are still in the window where an upswing could happen. And now let's also go back to the basic analysis so that I will not pick anything, just I hope it works. So let's get back to the main routines here, where I said we get the, okay, now this is, I have added more data. You see here now we get 2 peaks in this, where we before had just this flat line in the spectrum here. What always happens if you use different periods in time, so 217, 273, and this is what I mean. If you have a flat area in the spectrum, for sure, from a mathematical point of view, you always see somewhere a peak, but it's maybe just picked based on mathematical reasons. The reality will be somewhere in between. We had the 250 something, which is here. We also should now check the 217, which is this one here. And from this point of view, I mean, it's always important to have the midpoint of the cycle here. And the midpoint has been 2 or 3 weeks ago, where I said, okay, it looks like we need now see the confirmation to move to the upside, which we have not seen. So more or less the shortest version has now been invalidated by this down move here. So the 217, which is which happened at the midpoint of the cycle from a timing perspective. So if latest by the midpoint it is not confirmed and it's moving in the opposite direction, even the trust saw gets very low. So the shorter term 200-day cycle is more or less invalidated now. We should check the largest possible cycle with a length of 273 here, which then is similar to the 150 something. So that's what we see with cycle. There's still just one dominant cycle between 200 and 300 acting in the markets, or a combination of two which are very close to each other, to 217, 270, which is not easy for spectrum analysis to differentiate. Therefore, it's up to you to choose different periods, different ranges, different settings of the cycle framework to see if there are 2 different cycles, 1 main cycle. However, all show you there is no smaller cycle, which is important. And there's even no longer cycle, which is important, to the right hand and to the left hand side. So from the daily perspective, it's a clear indication where you need to look for the smaller cycles to work between 200 and 300. That's the period you need to go take a deeper look from a cycle analysis point of view. So you should deep dive also maybe to look now at 4-hour charts, weekly charts, to see where the cycles alignments are. It's not as easy as we want to have it, but that's cycle analysis. We don't always have this clear picture. So that's what I wanted to update to the cycle analysis on Bitcoin. So shorter term, final summary on this one, shorter term 200-day cycle is more or less invalidated. However, we see that based on the principle of variation, it could have shifted into a cycle of 250 to 270 days, which still give us a valid downward projection, but we need to see a very quick upswing in order to even get the longer term 200-day cycle active. Other, it will be completely invalidated and this cycle could not be used anymore. Yes, and maybe we we'll see that. So that's the point on Bitcoin. More detailed analysis required instead of just using this one cycle, at least from the daily perspective. Yes, let me have a look at the watch. So we're running for 40 minutes. That's mainly the topic I wanted to show you today. So it's more or less looking over my shoulder. That's how I start my cycle analysis each day. Opening the main markets, check the key time frame I'm interested in. Always remind me of what's the longer term cycles view of these data sets, which I can't do every time here, but you should have this in mind. Then go to your time frame you are interested in. You should be aware of what, from an historical point of view in this data set, have been reliable cycles which have been active in the past. Then with this knowledge, longer term perspective, past cycles in this data set, go to the spectrum, check the most dominant cycle, align it to the market behavior, and then you get a kind of view if the main market is in sync with the cycle or not. It's never just a yes or no answer. It's then required that you add your experience to what the spectrum shows you. Okay, so let me now look to your questions, which you have added in the chat section, and see what we have there. So this is now the final part where you have the chance to have some discussions here. So I think you're interested in the consumer price index, right? The CPI. I don't have the abbreviation for Yahoo Finance at hand. If you can put, I know there depends on where the chat on you. If you can tell me the ID of this data set, I will have a live look at the consumer price index with you. I just don't have this data set at hand. If you can add it to the chat, I will have a look at this in a second with you here together. So, and then Donna, you mentioned for Bitcoin, I have a very good method by using all cycles above 40 Bartle score, since very long and this cycle is very precise. Yeah, this is also a procedure if you don't want to pick a specific cycle. So Donna, let's maybe just repeat or showcase your method here for all in the session. So let's first clear all of that. You can always set an offset from a Bartle score where the cycle scanners should exclude cycles. And the standard setting is that the Bartle's limit is very low. This means the cycle scanner should show you all cycles detected based on the digital signal processing frequency algorithm, detrending what happens behind the scenes, without taking Bartles into account. So you need to manually filter out. But for sure, you can raise the threshold. You can say you only want to see cycles in the list above a certain threshold from the Bartle score, which you can configure in your profile settings. So Donna, I will now just repeat your procedure. You said above 40, right? Yes. So I will just add 40 and update the analysis. And now cycles with the Bartle score below 40 will not show up here. Yeah, you see it. The lowest one is 43. We could even stress this a little bit. Let's say we just want to have Bartles above 70, and you will see it clears the list very quickly. And then what you can do, instead of picking now one of these 8 cycles here, you can build, it's kind of auto composite. You can just activate all of them here. First, that's then the picture, it's kind of auto composite feature here. And Donna, I think this is at least what you show here. That this procedure, defining an offset from the Bartle's perspective, I would, like you mentioned, start 40, maybe go up to 70, somewhere in between. There's a good threshold level. Only use these cycles, and then select all, which gives you from a correlation score anyhow, the best correlation of the past data. So you see for sure this combination has a perfect fit to the past, and which also models the bottom phase very nicely with just some small swings here. So the addition of all these cycles leads exactly just to the sideways move or to the little swings. And this projection also still suggests that the long-term upward cycle, even though we have a combination now out of 8 cycles, points to the valid upswing projection into June. So but also what I said just some minutes ago, we need now to see the upturn very quickly. Otherwise, also this composite model here will be invalidated. But thanks for sharing this approach, Donna, which is for sure another way of using this method here. And then you could start to deselect cycles you're not interested in, or you can start to deselect cycles and see if the main projection switches. So by deactivating the cycle with a length of 40, you see that the overall projection won't change much, so you can skip it. And then you can cross-check even the cycle with a length of 72. For sure, it doesn't really matter if I have it in the mix or not in the mix, so I can also skip it. So then you can drill it down until you find the 5 cycles. This is my recommendation to go with and use these projection here. Donna, thanks for sharing this approach, which is also very valid. Mark, thanks for having you here today. Dale, Lars, my experience has been that if the longer term cycles are hard down or up, it tends to lead to a right or left translation of the shorter cycles. Any thoughts, Dale? Yes, this is also a good idea of how longer term cycles influence cycles on a shorter time frame, which is the right or left translation, or you call it with the it's not the time between the top and the low, which is not equal. So therefore, we also have the advanced option. It's this, you call it translation, but from a mathematical point of view, you can also bring this into the model by applying cycle skew factor. Yeah, so you can skew the cycle more to the left or to the right. So a positive, so to explain this, and yes, Dale, I can confirm that this is also what happens in the market. So therefore, let's go back to the S&P to demonstrate this, because we know that in this market the larger cycle is pointing down, and I think the shorter cycle, which I showed you, was this, and we know that the longer term cycles are downwards, and we can now add this, what you call left or right translation, also by bringing in the cycle skew here, which is standard positive way, which will exactly do this translation now in the data set, what you see here. So this is the right translation of the top and the left translation of the low, which you see here is even then bringing this model better into the mix. So thanks, Dale, for raising this point here. So this is exactly the effect what you mentioned. So the longer term cycle will impact the shorter term cycle, not only in amplitude. So one thing is that the upward projection of this cycle is limited. So we will not see a higher top here because the larger cycle is pointing down, but also on the timing perspective. So I think this is what you are bringing up, Dale. So we see the left-hand translation here. So the down moves are very sharp and quick, and the upward swings could last longer. So you couldn't bring this into your model, but then you need to be aware how to use the cycle skew factor. But I agree with you. This is a very interesting point to bring that in. And then Donna, you also mentioned this method also works for other assets like Tesla or newcomers. So yes, I think this was the procedure I just tried to repeat here. So you select the threshold for the Bartle score, select all cycles, will then show up to 10, which gives you a very good correlation to the past. and maybe then this could be a different way how to use the spectrum. Donna, thanks again for bringing this up. Mike, could you include a print button to output the entire analysis page to a printer or PDF? I think that's a good idea. You mean the scrolling down? So yeah, you have the spectrum. I'm sure you are aware of you can save it, so you can recall it for sure from your workbooks. So that's for sure possible. So you will not lose an analysis. But in terms of printing it out, there's no easy option yet. So I will take a note, Mike. A printing option might be good, even though we are living in a digital world. Sometimes printing out or generating a PDF, which then can be better saved in an archive. It's a good idea. I will take it into the development roadmap. Donna, I like to know why I cannot update SMI anymore. What is SMI for a data set? Help me. What's the abbreviation or which data source you're using? Is it Yahoo Finance? Just help me. Donna, please add this also into the chat if you're still there. What is happening to SMI, or what's this abbreviation standing for? And Muras, I was looking at CPI and Yahoo Finance, so I couldn't find. So please, if you want to have special assets covered here, one thing would be generate an idea in our ideas section here. There we have SMI. But at least here it is, isn't it? So 22nd, it's Friday. Okay, so here it's updated. If this is the right abbreviation, I just put the Swiss index. Okay. Need to cross check. Maybe it's this one here. Let's see what it will. Yeah. So for the consumer price index, I think it's a good measurement to have cycle analysis on the consumer price. So I need to look up the data set for the CPI so we can have a joint analysis on this data set. Murat, I will prepare this for next week. Promised. And Donna, I need to look up what's behind this ID for the. I just make a note for the Swiss index. I need to check where the data is coming from. As you know, it's not our data. We are trying to provide access to freely available data. But I will have a look at the SSMI Swiss index. Yup, that's it for today. We are almost running for an hour. Thanks for joining me today again. Taking the time with me. Next week will also be a live session. So expect me to be live here next week, next Monday. I hope you will join again so that we will meet again here. And thanks for your time. Happy cycle analysis. I hope I provided some useful information for you. Thanks for your time. Let's meet here next week. Have a safe week. Stay safe and bye.